So, good evening, viewers of the Tubeland. My name is Tyler, aka Chico, and welcome to the best channel for all your investigative needs, the one and only Chico Crypto. The big news 2 days ago was the announcement that the most likely ETF to get passed by the US government has been canceled, the Vaneck SolidX ETF. It isn't exactly clear who withdrew the application. If it was CBOE Global Markets, who was the exchange supposed to list it, Vaneck, SolidX, or a combination of agreement from the three. But the application has been pulled, and the given reason is because of the government shutdown. Let's hear what CEO of Vaneck, John Vaneck, had to say about this.
Let me just pivot a little bit and ask you about Bitcoin ETF. You're one of the people that had the Bitcoin ETF application out with the SEC. You told us this morning you're going to be withdrawing that application. It was up for a thumbs up or thumbs down within the next month. Can you tell us why you withdrew the application?
Yeah, so technically, well, you know, the SEC is affected by the shutdown. So we were engaged in discussions with the SEC about the Bitcoin-related issues, custody, market manipulation, prices, and that had to stop. And so instead of trying to slip through or something, we just had the application pulled, and we will refile and re-engage in the discussions when the SEC gets going again.
So yes, it has been withdrew, and Vaneck was in discussion with the SEC regarding Bitcoin-related issues, like protection and ownership of them and manipulation of their prices. And those discussions had to stop because of the government shutdown. And instead of hoping for it to get passed on the February 27th date, they withdrew it so they can continue discussions. And they will resubmit at a later date. Now, let's continue the discussion with Jan when the reporter asked to clarify why the exact reason it was pulled. Let's listen in.
But I want to clarify about why you pulled the application. You're not saying you pulled the application because SEC is closed necessarily. I mean, they were very concerned and have expressed their concerns about the inability to solve the custody problem, as well as the fact that most Bitcoin's priced overseas where they don't control it. Those are still major issues. I think you face the prospect they would have turned you down anyhow, don't you think?
Yes, absolutely. But we think we actually have pretty solid answers to those, but we just need to really demonstrate it very, very clearly and convincingly to the regulators, and we were trying to do that, but we obviously can't have meetings while they're shut down.
Let's rewind that. What did the reporter say about the SEC? They had issues with custody, and the pricing of Bitcoin is overseas, where they cannot control it. Hear it again.
Expressed their concerns about the inability to solve the custody problem, as well as the fact that most Bitcoin's priced overseas where they don't control it.
And Jan 100% agrees with the reporter. And they had solid answers to those questions of how the SEC and the US government can control the price. I've said this before and I'll say it again. A Bitcoin ETF is not good for Bitcoin unless it is physically backed and settled, where the players have to have their skin in the game, and illegal naked shorts cannot happen. This is a tool, just like cash-backed and settled futures, which will be used by the powers above us to control the price. But even a physically backed ETF can be manipulated with certain assets. I'll explain this in a bit. If you want to check out what I thought about the ETF 3 months ago, check out this video in the tag above. The video goes through the Gold ETF launch, .com bubble ETFs, and real estate ETFs. Not good for any of these types of assets, and were just major pump and dumps. Video link is also in the description. But we can relate a Bitcoin ETF most closely to the Gold ETF because they are both assets that can and should be physically backed and settled. Gold ETFs, for example, the Spider Gold Trust Exchange Traded Fund, ticker symbol GLD. We are told they are physically backed by gold bars. But regular investors who invest in an ETF like GLD don't actually own any of the gold. If they redeem a gold ETF, you do not receive the precious metal in any form. As investors, you will receive the cash equivalent. My question is, what is the point then? Now, here's what is interesting to me about these. Only authorized participants are allowed to create or redeem shares for actual gold. Authorized participants are registered broker-dealers or securities market participants who have agreements with the trustee of the ETF. These include the big boys like Wells Fargo, Citibank, Goldman Sachs, Morgan Stanley, JP Morgan Chase, and Bank of America. Regular shareholders have no rights of redemption. And listen to this, the gold is not required to be insured by the trust, which is not liable for loss, damage, theft, and the big one, fraud. Shares are bought in the open market by regular holders only after authorized participants, i.e. the big banks, decide to place or sell them, which are not liable for anything, including fraud and manipulation. The gold ETFs are just one big hustle run by the elite used to dilute the power of the asset, and I will show you why with some proof. Now, the custodian, the holder and protector of the gold that is supposed to back a majority of these ETFs, is a major elite power bank, HSBC, and the vault is located somewhere in London. The vault is called the Spider Vault and has been under major scrutiny for a long time, that they don't actually hold all the gold they are supposed to. The location of the vault is a complete mystery, but in 2011, CNBC's Bob Pisani was allowed to see the vault, only after he was taken in a van with blacked out windows and surrendering his cell phone for no location tracking capabilities. Here is a video inside the vault and Bob holding up one gold bar with the serial number. Let's watch now.
I'm with my producer and my cameraman. We're in a sealed, blacked out vehicle. We have no idea where we're going. We only know our final destination, the vault. Inside, an estimated 1,200 metric tons of gold, held by the Spider Gold Trust, or GLD. Launched in 2004, the GLD made it possible to own gold through an exchange-traded product. No need for investors to physically store gold. Instead, gold could be bought and sold like a stock. All of the gold in this room is in the form of gold bars and is required to conform to international standards. They all weigh about 400 ounces. They all have the stamp of the refiner on them. They all have a unique serial number, and they're all required to be at least 99.5% pure gold.
Here is where things get interesting. Researchers looked into the serial number of that gold bar, and guess what? That gold bar was not registered to be in the vault during that time. Here is a full list of the gold bars during the time. Do you see any ZJ6752? Now, what the fuck is going on? Is that a fake bar and did HSBC slip up? Well, no response from CNBC, Bob, or HSBC, just complete radio silence since. No one has been invited back to the vault since. It's suspicious as fuck and has allowed naked shorts in the futures market to wreck the price of gold since its peak in 2011. So, back to Bitcoin and the Bitcoin ETF. If a Bitcoin ETF is going to be physically backed, all we would need is the public key of the custodian's address, and anyone could verify if the custodian actually held the Bitcoin. This is why it will never get passed as physically backed, because they couldn't manipulate, even if they wanted to. The elite want control of Bitcoin, and they are figuring out a way to do it. The delay wasn't because of a shutdown. It was delayed because in the writing, the ETF was going to be physically backed. BOCT, a futures exchange, which was supposed to be physically backed, got delayed. Now an ETF that was supposed to be physically backed got delayed. The only thing that is allowed is futures that are cash backed and settled. No Bitcoins are ever involved, yet is a major decider of the spot price. The reason CBOE and CME were allowed to get these futures passed was because there is no way to verify Bitcoin. They can naked short the fuck out of it with no accountability whatsoever. Now, some people may be thinking, what the hell, is this over? Is Bitcoin and gold doomed? The Federal Reserve in the US can manipulate forever. No, they can't. There is a reason countries like India and China are unloading their excess supplies of US dollars and are buying physical gold bars at suppressed prices. There is a reason China is dominant in mining Bitcoin. They know fiat and the fiat hustle is coming to an end. And when it does, commodities like this are going to explode. Cheers, viewers. I'll see you next time.